Now we're going to jump into your world, your house a little bit. Interest rates. At the beginning of last year, we said that interest rates should decrease slightly throughout the year and end hopefully in the low sixes. We were doing so well on that prediction, and then we weren't.
Yep. We look great. Rates got to their bottom in September. So if the year would have stopped in September, we would have hit the home run.
Nailed it in September.
Would have totally hit the home run. But yeah, there's a ton of factors, right? And leading into September, it was like, all right, the Fed's going to cut rates, right? They cut in September, but some people think they cut too much because they cut a half of a point when they cut a quarter of a point. So that kind of switched the markets and said, hold on a second, maybe we rallied too much. And then we saw them creep up from then. One thing to remember when we talk about the Fed cutting rates, when the Fed cuts rates, they don't cut mortgage rates. They cut the Fed funds rate. They cut the rate at which banks borrow money from the Fed.
Yes.
That translates into home equity loans because prime rate is what home equity loans are based upon, which is 3% over Fed funds rate. It funnels into car loans, to credit cards, things like that. The Fed does not impact mortgage rates. No matter what people think, it's not the case.
Yes.
Directionally, it impacts mortgage rates, but the Fed does not do it. They don't, when they lower by a half, rates didn't lower by a half. We want to know what the Fed is doing, but what they specifically do has no impact on rates.
No, that's a great point, because I think you and I have so many conversations where we get the call and said, hey, the Fed just cut rates. What did my interest rate do? Right? There's going to be an impact, but it's not necessarily the way that people think. And sometimes it can even have a little bit of an adverse reaction.
It always goes the other way. When the Fed cuts rates, mortgage rates on that day go up.
Yeah.
When the Fed raises rates, mortgage rates on that day go down. I almost
That was a great insider tip for anybody that's listening.
It's like 95% accurate where that's happened. Very rarely has the Fed direction mirrored mortgage rates.
We had talked about the fact that we thought specifically because it was an election year that we expected to see those rates go down. And sure enough, they did. It was just from what happened from September on, that's where we saw things go a little goofy. And it felt like the rates this year were a little bit of a roller coaster ride. I got sick to my stomach at certain points.
Yes, it was quite rough. One of the things to think of when we talk about rates and what's going to happen, if you think of mortgage rates like a stock, if you're buying a company's stock, you have an idea that they're going to do something in the future, right? If you buy thinking the stock's going to go up, they're going to have a great year. If you think it's going to, you short it and it's going to go down, same thing happens with rates. That's why they rallied so much leading into September, was because they're like, all right, the Fed's going to cut rates and they're going to do it 1 or 2 or 3 more times. And we can see this in Fed funds futures. Going into like the December cut, people thought in November, the chances of another cut after the November cut was like 25%. And then more and more economic reports came in. Then it went to 60. Then it went to 70, right? And, pre that cut the week before, it was like 90% chance of that cut happening. So it's things like that drive interest rates. So it's really smart to talk to someone in the mortgage world that has a pulse on it, because there's a lot of people who know nothing. You use
the line all the time that those things are getting priced in already. So when we're leading up to something like that, you have so much inside scoop on it now that you can say, hey, that's already pricing into our rates. We're already seeing the expectation of them going down, so that when that actually happens, we don't see it. It's that optimism or that negative aspect that can really impact the rates more than, like you said, the actual rate.
Yes.
All in all, our rates did decrease a little bit. We were hoping to see them in the lower sixes by the end of the year. We hit that point in Q3.
Yeah.
Unfortunately, we bounced back up a little bit. So we're ending a little bit higher than we thought, but it's still lower than where we were last year. And one of the conversations that I had so many times this year was kind of thinking back to 2023. There was a point in Q3 where we locked in our highest person at 8.25.
Yes.
Like from 8.25 to the high sixes even. Like that's a major step in the right direction.
Yeah, and it was at that point, it was a hurry up and buy before they hit 9.
Right.
Like that's what the market was thinking, right? Because nobody had any idea. And what I would add to this too is when we talk about these rates, they're the general conforming interest rate, right? Which is any loan, Fannie Mae and Freddie Mac. There's jumbo loans that tend to be a little bit lower, but then for the first time buyers, There's FHA loans, which are a half a point lower than the rates we're talking about. There's VA loans for the veterans out there. They're even more than a half a point lower, right? So there's a bunch of, and first-time homebuyer programs are lower, right? So when we talk about the average market, much like when we talk about the average sales price, right? It's single families, condos, all of that. Mortgage rates are the same thing, but we're carving out one specific section in rate.
But we are doing things that we typically wouldn't to give people the big picture. Okay, so I'm going to give myself a B on that last one, I think. That's when you say, I'm going to give you a B plus, Amanda.
I'm going to give you a B plus, Amanda. I take orders well.
I'm just trying to make myself feel better as I go into some of these.
No, you did. I mean, you really did well. The fact that they went down, that's a win.
Winning.
Yes.
Well, they were so high. It was hard to get that one that wrong, right? What do we think rates are going to do in 2025?
Rates are going to stay range bound. Nothing on the horizon that's going to make rates go low, like dive. And there's seemingly nothing that's going to make rates go up. I think on the low end, maybe dip it into the fives, and we like high fives.
You heard it here first. I heard the 5 word.
High fives might mean instead of 6, we're selling 5.99.
100%.
But somewhere there, right? So toggling the 5% line or 6% line. Yes, we could see them bump up, right? And shoot over 7 for a second, but then come back down. So yes, there are models out there that say we might touch 7 again, but more likely it's going to be range bound, like high 5s to mid 6s, averaging across the line.
I think I'm pretty in line with you because, of course, you're one of my trusted resources. Because if we're not, I think I have a little bit of a different perspective on it, though, in the sense that I think that we're going to see a little less volatility this year. I think that rates throughout the first half of the year are going to remain more stable. None of the peaks or valleys. I don't personally think that they're going to go down much in the first half of the year. I think that the momentum will hopefully be in the second half of the year, that we start to see some reductions to get it to a better place at the end of the year. But I personally feel like that's going to be a not right up front. So once again, we talk about those people that are waiting for that. First of all, not good advice. But I think that it's something that I think will end better than we're starting. But I think that in the first half of the year, we're going to be relatively stable on. Obviously, there's a lot of wild cards of what would hit that. And I think that's the one thing to note. This sector, this prediction is so based on what the crap is happening in the world. And if the last few years have taught us anything, we've been through 2 international wars, a heck of an election. We've had a mayoral election here. We've had so many different things pelting us from different directions that have impacted our economy, impacted our rates, that's where it kind of feels like someday I'm putting on a bulletproof vest and I'm just kind of navigating through whatever is going to come our way.
Yeah. And, and that's one thing that people don't ever, I don't say don't ever. A lot of people don't think of what happens outside of the world, like the U.S., right? But geopolitical events, it's a big thing.
Huge.
Right? Because again, at the end of the day, we're the most stable economy on the planet. So when things go bad in the world, people buy our bonds, which makes our rates go down.
Yep.
Things like that, nobody can predict them, but those are things that have impacts. What I would say, and I always tell people, don't try to time the market.
Right.
Don't, trying to get to the bottom on the rate side is catching a falling knife. It's the only, you know what I mean? It's impossible to do.
Right.
And you can always refinance. The status quo stays and rates go down, then you refinance, right? But again, it's getting into that house. Think of the timing is the purchase side, not the rate side. Rates are what they are.
Right.
Right. So to people thinking about what to do, focus on the home.
Some of the best advice that I've heard you give time and time again is, especially once somebody finds the home and you've got the time between contract and closing, is that locking in creates a ceiling for the rates, right? We've been in a volatile market, so locking in creates a ceiling for the rates and helps people to be successful longer. I think both of us agree that hopefully a year from now, we're looking at numbers that are a bit on the lower side, a bit more favorable. I think we had a little bit of a thought process on how they're going to get there, but that hopefully by the end of the year, we're sitting here and people are very happy with what they're seeing.
Yes, and we get A's on our report card.